It was good people. This your boy Cincy, aka Mr. Good Vibes, and welcome back to my YouTube channel. How you guys doing? How's your health? How's life? You know how it is, man. My prayers that the Lord Almighty will continue to protect and guide you in this wonderful journey. Now, with that being said, let's just dive straight to what is going on today. So, as you guys know, the market has been on a different tier lately. It's been falling hard, and I can imagine a lot of traders are wondering what is the next step? What do I do next? And one of the things I would say is, or one thing I've learned this week is, I learned a very, very hard lesson. A lot of people lost money, including myself. I'm not going to sugarcoat that. And I think for me, one of the biggest mistake that I made this week was me being a little bit too sentimental about the market and getting away with noise. So a lot of people have been talking about Santa Rally, Santa Rally, Santa Rally. And a lot of people have been talking about the incoming president being very, very crypto friendly. And we all forgot that there is something called technical analysis. Now, there is the fundamental analysis, which is being backed up by the incoming president being crypto friendly. Yes, we get that. That is a fundamental analysis. And that is good for Bitcoin and that is good for the market with all the enthusiasm coming in. But the problem with that is a lot of us tend to get carried away and forget to go back to the technical part and really, really sit down and take a deep dive into what the chart is actually saying. And remember what I always say, as a technical analyst trader or analysis trader, I don't even know what to use there. You have to be able to balance the fundamental side with the technical side, which means what exactly are you seeing in front of you with respect to your trade and with respect to what the fundamentals are saying, which is economic data, whatever the public opinion is saying about certain things, and also balance sheets of certain companies and the way their numbers look. So you have to be able to find the right balance. So with that being said, let's just jump into the chart so that way I'm not blabbing too much about what I'm trying to deliver here. So for those of you who know me, there are three major indexes that control the US market, which I always like to look at because these indexes are the ones that actually tell me what direction I think the US market is going to be going. And that is the XPX 500, the US 30, and the NAS 100. So the XPX 500, so those numbers actually mean something. XPX 500 means S&P 500, which are the top 500 companies in the US. So, which means if these companies are performing well, then the US economy is definitely doing good. Now, the NAS 100, on the other hand, has to do with the NASDAQ, which is tied to more of the technology, the top 100 technology stocks in the US. And that is where you see the likes of NVIDIA, Amazon, and so on. Now, the US 30 is the more of the Dow Jones industrial companies. And that kind of like monitors how the industrial companies are doing in the US. And when I mean industrial, I'm talking about manufacturing, companies like Boeing, companies like Caterpillar, companies like Home Depot, Walmart, retail, transportation as well. So you will find a lot of those companies in the US states, and that gives us an idea of also how the economy is performing. Don't forget that. Now, all these indexes all are important, but the most important one is definitely the XPX 500. Now, the XPX 500 is also the equivalent of some of the ETFs that you guys are probably used to trading, and that is the SPY, the SPY. Now, the NASDAQ 100 is equivalent to the QQQ, and the US 30 is equivalent to the DIA. So for those of you who have been trading some time, you already know what I'm talking about. So today I want to start with the XPX and tell you guys exactly what I'm seeing on the chart and what I think the direction of the market is going to be in the near future. So for those of you who are just following me for the first time, I look at my chart and I have two things that I always like to clarify. The first one is my primary indicators, and the primary indicators typically go on the chart. For example, what do I mean by primary indicator? I'm looking at the daily chart in this case, and my primary indicator here is my S sign and my red arrow. Whenever these two things come up on my chart, that is telling me that this is time for you to start selling and the direction of the price might be going down. But if you see a green arrow and a B sign, then that is telling you that this is a time to buy and the direction of the price could be going up. So you can see the most current signal that we see here for the XPX 500 is what? The S sign, which means sell, and a red arrow, which means the direction is going to be going down. See what happened. This sign came in on the 6th of December, and look what happened. Boom, the market has been falling since then. Now you can see this big candle was the day the Fed spoke, and as you guys know, the Feds came in And they told us that they were not going to be cutting as many rates as they were expected for 2025. So we went from 5 to 6 down to only 2. Now, why I don't think that is still a bad thing, I think the market might have overreacted based on that news. And a lot of us got this unexpected fall in the market, which affected the cryptocurrency market as well, which I'll definitely get back into. So this fall wasn't necessarily good for anybody. And a lot of people were worried. I lost a lot of money. I saw a lot of comments from a lot of YouTubers saying they lost a lot of money as well, which was expected. Now, the thing is, again, and that's because I felt like a lot of us were just being a little bit too sentimental and not going deep into our technical analysis. So the following day, we had the market try to recover and it fell off. But yesterday, Friday, we had a very, very good recovery from this support right here. We can see, so we'll call these stringers. For those of you who don't know, these are stringers. So you can see there was a string. You can see that string like a needle. So it touched the support and boom, the market just shot all the way up yesterday. Look at that. This was a massive candle. This was definitely a crazy rally yesterday. And it was exciting. I'm not going to lie. I personally missed it as I still didn't trust the market. But now this is where the problem comes. Immediately we touched what I call, we even went above what I call my baseline test. We went above my baseline. I was watching it. And before the end of close yesterday, we went from 6,000 points, from 6,000, no, it's not points, from 6,006, and we closed all the way at 5,092. So you can see there was quite a few pullback that happened from the high of yesterday all the way to the close, which was a little bit concerning for me because if we had closed above this baseline, then I would think maybe that is definitely good, which means there were a lot of buyers that held on to their positions and there was no longer more selling. Now, I think this relief rally that we saw on Friday created an opportunity for some people to actually escape whatever ordeal they might have gotten on this candle. So you can see a lot of people try to get as much as they can and they push it all the way back or more than halfway. And you can see it seems like they got enough of their money back. And guess what? The sell-off started again and we closed below my baseline. Now, the fact that we're closing below this baseline is giving me a little bit of concern, telling me that the market bearishness or the bearish story of this market has not yet ended yet. Again, now, with that being said, I'm looking at this major moving average, which is, it goes from blue and you can see this red. Again, if it's a red color, it's also also signifying danger. And you can see my moving averages, and now you can see the price are now trading below my moving averages. Now, with that being said, I said I always look at my primary indicator, and below my chart are my secondary indicators, which you see down here. Now, the way I interpret this is very simple. Since we've already confirmed the sign and the direction of the price going down, I want to make sure that these secondary indicators also validate what I'm seeing on my chart. So you can see, for example, for this indicator, before I start, you can see I have what 1, 2, 3, 4, 5. So out of these 5 indicators, I only need at least maybe about 3 or 4 of them to confirm in order for me to be able to validate the trade. But you see, in this particular case, you can see I'm seeing a 2-line cross, and you're wondering what is this 2-line cross? Now take a look at this. We have a green line, which is the fast line, and we have a red line, which is a slow line. All you need to know is that whenever the green line goes above the red line, like you see here, that is more of a buy signal, or what I call a bull case. And the minute you start to see a switch, which means the red starts to go above the green, then that is telling us more of a sell signal in this particular instance. So you see we've switched from buy in this case to more of a sell in this case. So the current status of the XPX 500 is currently a sell based on my daily chart, and you can see the current status, the red is above the green, and if it was the other way around, to be a buy. So we've confirmed the sell signal for these first two line cross. Let's look at the second one. The second one is a little bit different, and this is more of a zero line. And why do I call it a zero line? The white line here is a zero line. So whenever the signal line goes below the zero line and goes into that into that negative side, then that is more of a sell signal. If the signal goes above the zero line and is on the positive side, then that's going to be more of a buy. So you can see the current status of the XPX 500 is actually deep down in that negative side, and that is telling me that the sell position is definitely, or the bearish story is definitely hanging on, and is definitely matching what we see on the chart. Now, the third one, so we've confirmed 2 indicators. The third one is this indicator here. You can see we go from green to red. Green is a buy, red is a sell. So if you go from green to red, that is definitely a sell or a bearish case in this case. So you can see we've gone below also that zero mark. You see there's a positive side and a negative side. So we've gone from being a bullish sell, or I guess you can call it that, to more of a bearish sell now, which means a sell has been confirmed as we're going towards that negative side of things. And I typically use this floor as a resistance, so you can see that the floor is definitely not over. So there's a chance that this could actually fall into this resistance level before we can actually see any potential buy signal. So this is definitely confirmation number 3. Number 4 is another signal another type of signal. It's a zero line signal. Again, the white line is the zero line. But all you need to know is that whenever the purple line, which is the signal line, is between my zero and my lower level, then that is a sell. So you can see the current signal is on the negative side. Then this is telling me this is a sell or a bearish case for this indicator. But if it was actually on the positive side, then that's going to be more of a buy or a bullish case. So we have 3 bearish cases that I've now confirmed. 4 bearish cases, and the last one is this one, which is a 2-line cross. And all you need to know is that whenever the green goes above the red, then that is a buy. But if the red happens to go above the green, like you see in this case, then that is going to be more of a sell signal. So as a matter of fact, like I said, I typically look for 3 or 4 in order for me to validate. But today I'm getting a full-on confirmation from 5 different indicators created by 5 different programmers, right? So you can see these indicators have nothing to do with each other. And I'm only trying to see what point are they all aligning and telling me the same thing, and that's when you actually confirm your signal. Hope I'm communicating, hope I'm making sense. So you can see now the fact that we've pulled back. So the fact that we've confirmed this and we've pulled back from this, my major baseline for me was a concern. We went above it yesterday. I was encouraged, and I told myself if I see it below this baseline, I was going to start shorting the market, which I actually started doing. I'm currently shorting this market, as I believe that if the market opens on Wednesday, there is a chance that we could fall back to this support line. And again, how am I getting this support line? The support line is a common line of support. You can see we had a quick bounce on this level. You can see lots of stringers here, and you can see this also acted as a resistance at some point in the future where the price came to this level and fell all the way back down, which also acted as a support here. So you can see I believe we're going to drop on Monday. There's a chance that we could come back and test this red line, and if we break this red line, then we're definitely going to come and test this other line, which is like 5,820. And if by any chance, as we go into further and we don't get the Christmas rally, I know a lot of people are expecting Santa rally, and that is completely, absolutely fine. And which is always the sentiment. The Santa rally is always the last, last 7 days? I think the last 5 days of December and the first 2 days of January. I think that's what I heard. But there's a chance that we might not see that Santa rally this year. And if we do see it, it could be coming from the bottom. So again, next week, Monday and Tuesday are going to be very critical. If we break this 5,800, there's a chance that we could go test this 5,700 sometime in the future. So again, don't get carried away. So we could get a relief rally that can act as a Santa rally, and come next year, we can actually start going down, even further down. And so in order for us to believe that this market is completely bullish, we need to start saying things like this B sign and this green arrow, and also start to see this price trade above this baseline. Hope I'm communicating. Now, let's take a look at the weekly chart. So again, we can look at daily. For those of you who don't know, daily chart means that each one of these candle represents one day. So you can see this candle right here represents yesterday, Friday, 20th December. But if I go to weekly, this will represent 1 week. So you can see this candle represents Monday to Friday of yesterday. So you can see now, I was talking to you guys, as for those of you who have been following me closely, I was talking to you guys and mentioning that I need the weekly of the XPX 500 to close above this green moving average. Now, this is the worst thing that happened yesterday. Not only did we close below it, we also see now the S sign and the red arrow on the weekly chart developing, which is very, very concerning for me. And we've closed below 2 moving averages, which is this red and green line, and now this gray and aqua color. And you can see we closed slightly above this other moving average, which was okay. But again, this is concerning, even though we did see a lot of buy pressure coming from this 5,800 level all the way down to this 5947 level, which is still good. But the fact that we close below this moving average and below this yellow moving average, and we're seeing this red sign, S sign, and we're seeing this green, this red arrow indicating the downward direction to the downside. For me, it's a little bit concerning, and this is why I think the market might still not be ready for that rally. So I don't know where this Santa rally is going to come from. We need to see some type of reaction on Monday, and Monday is going to be very, very critical for this market. Remember on my last two videos, I said Thursday and Friday were very, very critical days after that huge dip from Wednesday. But guess what? Even though we do have some encouraging move to the upside, the way we closed yesterday still doesn't give me that confidence that we are out of this bear market. Or now, yeah, I won't call it a bear market, but when we're out of the water, that the market might still fall down. Now, another thing is, again, like I said, I look at secondary indicators. So you can see, remember on the last one I showed you guys, we had again the red above the green. Again, we are showing the red above the green now on the weekly. So we've gone from a daily chart and we've come to go into a more of a weekly chart, which is more of a bigger picture. Because if you look at the weekly chart, in all honesty, the direction is still looking very, very strong. But now, if you dive down into the daily chart, that is when you start to open up the onions. You're opening up that layer and trying to see what is in there. Looking at the weekly chart would only give you a big picture, but sometimes you have to go to a smaller time frame to really see what exactly is going on here, right? So you can see, as I mentioned, we close below this moving average is a concern. When I start looking at my secondary indicators, you can see the first one here has given me a sell signal. Now, I get one sell signal, which is also confirming what is on the chart. Now, the second one is, you can see my second indicator still looks good. The signal line is still on the positive side. And you can see for this one, we've gone from red to green and it's still on the positive side. So that is still bullish. You can see that the signal line is still on the positive side. So that is still definitely good. And you can see that my other two line cross, the green is still above the red. And that is still definitely optimistically bullish. Now, again, like I said, the fact that we're beginning to see the sign of one of the indicators showing a sell sign and in line with what is on the chart is the beginning of something that we could definitely want to anticipate. Because remember, longer time frames will take more time to kind of develop. But the fact that we're beginning to see all these little signals and signs of things on the weekly chart that the market might come down is a bit of concern to me. And when I opened it and went down into the daily chart, what did I see? I saw a bigger picture of things that looks even more scary. Now, I know this might not be what a lot of you want to hear, and you might be like, what the heck is this guy? And what does he know? Well, I'm just telling you what I see on my technical charts. Again, I'm a technical analyst, trader. I don't try to prove to anyone that I'm better or I'm the guru or anything, but I'm just going by what I see on my chart with respect to how I interpret things. Now, some of you might have fundamental analysis based on one or two things that you've heard or seen on the TV or heard from a YouTuber, or you've done your own research and you might be convinced that the market might still go up, and that's fine. But again, I'm going by what I see live on the chart. So I've confirmed XPX 500 as a danger sign that we need to watch out for. So let's take a look at the NASDAQ 100 and compare it to the XPX and see how is that reacting. So you can see NASDAQ yesterday closed to 0.67 points. And if you look at the weekly chart for NASDAQ, the direction is definitely still going to the upside. As a matter of fact, NASDAQ does look better than the XPX 500. Now, what are NASDAQ stocks? NASDAQ stocks are the likes of Google, NVIDIA, Amazon, Meta, Netflix, etc. Now, Tesla. Now, remember, these guys can still rescue the market because the trend of the NASDAQ stock looks pretty good. The fact that we got rejection all the way down to this moving average, and now we've moved all the way up and closed above this yellow one, is good for NASDAQ. You know, it's definitely good and definitely encouraging. As a matter of fact, if you look down below, you will see that all the secondary indicators for the NASDAQ happens to still be intact. But now look at this. There is a sign that this is beginning to come down and we could get a sell signal on this signal. But everything else still looks relatively bullish, as you guys know from what I've already explained in the past to you guys with respect to how I interpret these signals. So you can see the signal line is still positive, that is bullish, and you can see my two line cross is still the green above the red, which is very, 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 very bullish. Now that I've talked about the NASDAQ, let's go down and talk about the US 30. So the US 30 is the Dow Jones 30 because it's very, very important that we talk about that. It's very, very important that we talk about the US 30 as well. And you can see the US 30 is went up 1.07 percent yesterday, which is about 452 points. And what do you see on the US 30? Now, the US 30 happens to be the worst of the worst. For the US 30, it's been dropping for days, and it's been dropping for days. Well, before I talk about US 30, let me quickly jump back to NAS 100. And I want to show you guys something on NAS 100, which I forgot to show you guys. Now, why the NAS might look good on the weekly side. When I went to the daily charts, see, this is what we see on the daily chart. We see, again, you have to open the daily chart to see the real thing in the onion. So the weekly chart might look good, but the daily chart will give you a better idea of what you should be expecting. So you see S sign, red arrow, indicating the price is going down. This is the day of the Fed news, huge drop in the Dow, in the Nasdaq name. We got a little bit of rejection the following day, and yesterday you can see we got that huge move from this support level, and we went all the way and touched my baseline. Again, this is what I call a baseline test or a baseline flush. We got to that baseline right there, and they flushed it all the way back down to 21,257. Again, the fact that we closed below this red line is a red flag for me. And if you look down below on the secondary indicators, what do you see? You see that my two-line cross red is above the green. That is a sell signal. You would see that my one-line cross is actually now below my zero line, and so onto the negative side. That is definitely a sell signal that we have to watch out for. You also see that I'm going from green to red. That is a sell signal. But you can see the sell is still on the positive side, but it's just a matter of time before we cross over into what I call a sell or super bearish signal. And this other signal here, you can see that the signal has gone below the zero line, which is also on the positive side. So that is definitely concerning for Nasdaq 100. And you can see the red now has officially gone above the green, which is also indicating definitely a sell signal or a bearish signal. Now, one thing I always like to watch out for is I always like to look for that first retest. That first retest was expected, and I actually expected it, which is why I shorted the market from this level, and now I'm actually shorting it, and I'm beginning to watch it now. The only time I would close my short is when it goes above this baseline. So again, Monday is going to be very critical, and I believe we could open tomorrow's future to the downside and continue all the way back down to the support. And if we break this support level, there's a chance we will test this, and who knows, maybe we could go all the way down to this 19,900 level in the near future. I don't know what to say about this. I know it's scary, but this is the reality of what I'm seeing on my chart. So now I'm going to dive back. I just wanted to just cover this part and show you guys what the Nasdaq 100 is also doing, and just to show you how all of them are coming together and all saying the same thing on the daily chart and also on the weekly side of things. Now, US 30, I already told you guys on the weekly side of things for US 30, again, the market still looks relatively bullish if I zoom out, right? But the problem is if you start to look down to things on the weekly chart, the signs were there. We had this S sign and we had a red arrow indicating the direction going to the downside. And not only that, we've seen this candle close below my moving average on the weekly side. In fact, this is more of a bigger scale. And you can see the following week, what happens? The market even continues to drop further. And we tend to see this trend line that I draw, because I drew this trend line because this trend line tends to act as a support in the future for when Dow goes down this much. And you can see that's exactly what happened. We got a reaction on that baseline, on that trend line, and we bounced all the way up. Now, I still don't trust this rally, as I believe that if Dow opens tomorrow and somehow somewhere finds itself below this baseline anytime in the future, not tomorrow, Monday, and somehow someone finds itself below this trend line somewhere anytime in the future, then this could be the beginning of a bearish signal. But if you look down below on the secondary indicator on the weekly chart, you can see that all the bearish setups are beginning to now show up again. Red above the green, that is definitely a bearish or a sell signal. If you look at my zero line, finally we got the signal going below the zero line after the end of this week's crash. So again, that is concerning for me. And I'm looking at this going from green to red. That is definitely concerning. And you can see here, I'm seeing my signal line is still above the zero line, which is still bullish. But again, we've confirmed for the Dow, 1, 2, 3, bearish indicator, even though this one still looks bullish. But remember what I said, I just need 3 to 5. I need only 3 out of the 5 to confirm for me to start getting worried. So I've confirmed 3 indicators on the Dow name to be bearish, and I've also confirmed the primary indicator to be bearish as well. And if you look at the daily charts, what do you see? You can see the Dow has been falling astronomically crazy it had like 10 straight days of red. Again, we found support on that trend line, which is exactly what we did. And we found support there, and we actually literally just bounced off that trend line and went all the way to my baseline as a resistance, and we found resistance there, and you can see the price fell all the way back down below my two baselines. Now I'm going to be watching Dow closely, as I want Dow to be trading above this baseline in order for me to believe that the bullish sentiments might be coming back. Now I'm not saying the Santa Rally case it's over, but I'm saying that don't be surprised if we don't necessarily see Santa Rally, or if the Santa Rally we see as more of what I call a relief rally in disguise. Again, if you look down below, you can see that this is definitely a sell signal. Red above the green is a sell. You can see my green is above my white line. That is a sell. You can see this color is red. That is a sell. You can see this signal is, let me show you this. You can see the signal is on the negative side. That is definitely a sell for the Dow name. And you can see my two-line cross had this crossover right there, which is a sell crossover. You can see the red is above the green, which is our ultimate sell signal. And in fact, this color too is pink. That's so telling me that's a sell signal. So a lot of sell signals everywhere on the three major indexes that are used to gauge market performance for the US. So again, this is why I'm not going to be sentimental. I know a lot of people are expecting the market to bounce. We're expecting Christmas rally, but then again, that is just because we are all just being sentimental. Again, what is your technical analysis saying? What is the chart saying? Now, if you do understand that, now what is the fundamental analysis? Again, the fundamental analysis based on the US markets, the fact that even though inflation data came out yesterday and it came out good, the Fed have already told us that they're going to be cutting only 2 more rate cuts next year as respect to 4 or 5. Now, that doesn't mean that they're not going to cut more, but there's a chance that they could cut more. But right now, this is where we are with respect to my technical analysis and my fundamental analysis. Now, that's all I have to say about the market right now. And this is exactly why I don't trust the market. I don't want to make this video too long, which is why I'm not going to talk about cryptocurrency on this video. It's just going to be strictly the stocks, but I'm just going to cover Bitcoin briefly. But once I cover Bitcoin briefly, I'm definitely going to make another video kind of like this, just to show you guys what I'm seeing with respect to the crypto currency war. So you can see BTC currently is down what 0.1%, 0.1%, 17%. And you can see BTC on the daily chart too is showing something very, very similar to what I was talking about, where we have the S sign and the red arrow to the downside, and we are also trading below my moving average. And you can see we also got that reaction that we bounced from the support level, and see how we got to this baseline and we got that same flush. I believe Bitcoin might come back and test this support level, and if we test this support level and go below this 92 level, there's a chance that we could come find support here at this 89 level, maybe retrace back again and fall all the way back down as we go down. So there's a chance that, Bitcoin, again, we could see 70K, 80K, 70K are not being ruled out for Bitcoin on this next run. And that is exactly where I would definitely come in and start buying more as we go. Again, this is just my own opinion, my own technical analysis. You don't necessarily have to accept or agree to it, but always make sure that you yourself, you have a plan and you know exactly where you're going and exactly what you need to do in this crazy, volatile market. Again, this is your boy Cincy, aka Mr. Good Vibes, and let's make some small money together, even if it's just a little.